Trying to time the market is like getting my dog to pick stocks, and more often than not, it doesn't go very well. And in recent weeks, we have seen the stock market take a beating with VOO going as low as $380 to $385. But this happens because of various reasons like interest rate hikes, interest in COVID in China, Elon Musk buying Twitter, and many more. But one thing is for sure is that we can see that the market does not like uncertainty.
Excuse me, sir, the markets hate uncertainty.
Like back in 2020 when COVID first started, the market took a huge beating and went down 30%. And if you did pick up some stocks then, you will be in a very good position right now. But if you have started buying just earlier this year, or have been consistently buying, you will probably notice a drop in your portfolio, and this is what we are going to talk about in this video. Hi, my name is Jordan and welcome to the channel. So the markets has been kind of red in the last couple of weeks, and this can be kind of scary for most of us. Be it in the crypto market or in the stock market, both these places have taken a huge beating and most of us are probably in the red. But it is not all doom and gloom because markets do work in cycles and there will be ups and downs throughout the years. But let's talk about a few ways you can prepare yourself to tide through these tough times, and hopefully when the market turns around, we'll all be fine and dandy.
Yeah, it's all fine and dandy and fabulous.
The first thing we can do is to prepare ourselves by solidifying our emergency savings. So when we start investing, it's always good to have 6 to 12 months of emergency funds set aside, which will act like a buffer when the markets go south. And when the market do go south, these can trigger quite a few chain reactions which might end up with the economy not doing so well, which can in turn cause less employment, which can in turn lead us to losing our jobs. But always remember that everyone is replaceable regardless of the value you bring to the company. And when we talk about the 6 to 12 months of emergency funds, I'm not saying that you need to have 6 to 12 months of emergency funds before you start investing, but you should consider reducing some expenses for a short period of time so you are able to accumulate your emergency funds while investing a little bit into the market. Having this two-pronged approach will take a longer time for you to reach that 6 to 12 months of emergency funds.
How long?
But it allows you to grab the opportunities available in the market as well. And to calculate these 6 to 12 months of emergency funds, we can use a simple formula of calculating our monthly expenses and then multiplying it by 12 or by 6. So your monthly expenses will include things like your bills, your insurance, your groceries, your transportation, your entertainment, etc. So for example, if you have a monthly expense of $1,000, this would mean you need $6,000 to $12,000 of funds in liquid cash in the event you lose your job or require funds for medical bills, etc. And if your monthly expenses are much higher, this would mean you need to save more or reduce your spending.
Please let him earn more money than I do.
And once you got that lump sum build up over time, it will enable you to invest without fear and not get affected by emotions when the market goes south. Having the emergency fund build up also allows you to easily make payments for unexpected expenses without having to need to sell your assets at a loss if the markets are not doing well. And the next thing you need to do here is to diversify your portfolio. Although it's easier said than done because sometimes we get too emotional with our purchases, which prevents us from offloading or selling them for a profit. So this might in turn hurt our portfolio and it will start to affect us emotionally and eat us from the inside out.
That's what's eating me up inside.
So in the crypto space, moving out of your coin holdings and into stable coins might be a good option to have. So this protects your capital and allows you to leverage on earn accounts to earn some interest while waiting for prices to stabilize before re-entering the market. The other way to diversify is to move those profits into safer assets like stocks and ETFs. And this is where today's sponsor, HabitTrade, comes in. We all know that cryptocurrencies do have ups and downs, and this is a pretty scary roller coaster ride. And sometimes when we have those gains, we want to safeguard it and ensure that it grows and does not stay stagnant. So this is where the sponsor for today's video, HabitTrade, comes in. HabitTrade is the first crypto-friendly global stock investment platform that allows you to trade stocks available on the Nasdaq, New York Stock Exchange, and Hong Kong Exchange. So this means that you're able to purchase your favorite stocks like Tesla, P&G, Apple, and much more on HabitTrade. But one of the unique features of HabitTrade is the ability to transfer stable coins like USDT directly into HabitTrade platform and start purchasing these stocks with a few taps of the button. So having our profits placed into a blue chip stock allows us to diversify our portfolio, reducing the risk that we are already taking on with our money. The interface on HabitTrade is simple and easy, which is something I really appreciate because why complicate stuff? Being simple and easy also means that people or beginners who are looking to start investing can use their crypto gains to diversify into stocks that hold fewer risks. And one feature that I really like about HabitTrade is the news tab. So the news tab gives me an up-to-date news and also shows me the price change of stocks that are mentioned in the news, which is a great way to get bite-sized information on the go. There is also a trending page that shows you the latest trending stocks in the market that you can look into. And by signing up with the link in the description down below, you get a free stock worth $5 when you make your first purchase of $300 in stocks. And if you purchase more than $1,000 of stocks, you'll get a free stock worth up to $20. On top of that, you'll get customized market intelligence to help you make informed trading decisions. But most importantly, always do your own research before investing any money into any investment instrument. So thank you HabitTrade for sponsoring today's video. By moving your funds into safer and less volatile assets, you are essentially in wealth preservation mode. So in wealth preservation mode, you safeguard your wealth so you do not lose that money that you have earned. So this enables you to grow a retirement fund for your golden years, which is why people start planning for their retirement early so that they can do what they really love when they retire. And by spreading your money across different assets allows you to enjoy growth as well as fixed income. So for example, if you are into dividend stocks and crypto, you'll benefit from the passive income that dividend stocks provide, and at the same time having some crypto that allows you to get explosive price action gains if the market goes your way. Next is to know what you own and why you own them. So more often than not, we purchase stocks or even crypto because our friends tells us about it, or when we see another YouTube video and we're like, hey, let's follow this guy. And I'm also guilty of that. But one thing I learned is to take these videos as reference materials where people share their opinion about a certain product. So there are always two sides of a coin, and what works for me might not eventually work for you. And because our circumstances are also very different. So for example, if I was a young father with 2 kids, I might not want to dish out 2 videos a week on YouTube for that small side income that it brings me. But if you are single with not much commitments, picking up a side hustle or gigs might be a great way to generate additional supplementary income. So this works for investments as well. So having additional knowledge in the field you work in gives you additional insights and know-hows of the industry. So I got friends who are super heavy into bank stocks because they know how the bank works and why bank stocks are the great investments. But I, on the other hand, prefer tech stocks and broad market ETFs because it gives me much more diversification. So if you look back into your portfolio and ask yourself why are you buying these stocks or crypto, it might give you some reaffirmation of your investment decisions. But if you're undecided, having a second opinion from a different group of friends, reading articles, or researching on the company might be something useful to have as well. And last but not least is to not panic. So as you invest more and more into the market, you start to understand that market downturns are very normal and it's just a circle of life. And if you look back in 2010, there are dips happening almost every other year, but across a long enough time period, every correction or every dip, the stock market will eventually rebound again. And the best thing you can do now is to stay calm and ride out the storm. And at the same time, by keeping your money invested, you'll reap the rewards when the stock prices inevitably bounce back. By keeping the long-term goal in mind, it will be a little easier to avoid getting caught up in the market's day-to-day movements. At the end of the day, nobody knows when the market will crash or not, and it's wise to start preparing for it, just in case it happens. And when you have a strategy in place, you can rest easier knowing that your investments are as safe as possible. Thank you guys so much for your time. Don't forget to get your free stock with HabitTrade. Drop a like if you haven't, subscribe, and I'll see you in the next one.